In the middle of the current week, the US dollar index once again reached a local high and exceeded the 105.5 mark. As a matter of fact, the United States will publish a few macroeconomic reports this week. Thus, the US dollar price will be mainly shaped by comments and forecasts. Moreover, most often, these two factors act in a tandem. For example, Minneapolis Federal Reserve President Neil Kashkari did not rule out the possibility of raising the rate of inflation in the US accelerates. The US currency markets worked out the hawkish commentary of the politician on Wednesday because of the time difference. By the way, the greenback continued to strengthen against the yen, and the Japanese authorities are very generous in their cautionary comments against sharp currency movements. However, their almost daily statements help the falling yen less and less. We will tell you trade what balance of the world's second largest economy has so far been more varying than you're watching. The only encouraging factor is that China's trade balance is still positive. That the country sells more than it buys. Moreover, the April forecast put forward by Beijing look very ambitious. Both imports and exports are expected to grow. Last month, the indicators fell to negative values, and this time exports may rise to +2 from a -7.5%, and imports are likely to increase to +5 from a -1.9%. If China's big plans come true, the yuan could put pressure on the US dollar through New Zealand and Australian currencies. The Bank of England will also meet on May 9. In March, the regulator kept its bank rate at 5.25%, the highest level since 2008. In the previous period, the vote results failed to meet the market's expectations. MPC members were expected to vote 7-2, with the two politicians holding hawkish views. In effect, the Monetary Policy Committee voted 8-1. At the same time, one member favored a 25 basis point cut. Thus, the regulator took the opposite direction instead of a moderately hawkish one. If the scenario repeats on a Thursday, the pound sterling may slide. Also, on May 9, the US will issue its initial jobless claims figures. This report is released weekly and should not boost volatility in the market. However, even such uninformative reports are attracting attention after the release of a very weak data on the US labor market at the end of last week. The increase in the number of Americans applying for unemployment benefits for the first time means further cooling of the labor market. This in turn may cause a drop in incomes, consumer demand and prices. In other words, a rise in the number of unemployed people makes the US economy weaker and pushes the dollar down. GDP data is one of the most important economic indicators. On a Friday, May the 10th, the UK will disclose its GDP data. In the fourth quarter of 2023, the economy contracted so much that experts started discussing a technical recession. Moreover, the decline occurred against the background of a high inflation, record borrowing costs, and weak external demand. At the same time, exports fell more than imports. Therefore, the publication of the first GDP report in 2024 is a long-awaited event. On a yearly basis, GDP may rise to +0.1% from -0.2%. In the event of this, the US dollar may lose value against major currencies, including the pound sterling. Also, on a Friday, traders will focus on the report on the ECB meeting held in April. Notably, the Eurozone regulator capped interest rates at a record high level of 4.5% for the fifth time in a row. And during a press conference, ECB President Christine Lagarde said that no comments on a certain trajectory of rates were made in advance. However, traders may find some hints about the regulator's future decisions in the meeting protocol. Also, this day, Canada is going to provide its labor market reports. Earlier, the unemployment rate in the country jumped to 6.1%, the highest level since October 2021. Therefore, the Bank of Canada believes that higher interest rates have a greater influence on the Canadian labor market, and this is a strong reason to cut rates by the second quarter of this year. In that case, the Canadian dollar will lose its upward momentum. By the way, a rise in the US dollar could be driven by the University of Michigan's consumer sentiment data, which is slated for release on May 10. If the indicator shows an anticipated increase of up to 78%, the US dollar will gain value. However, consumers continue to express uncertainty about the economic future in anticipation of the results of the upcoming elections. Therefore, the indicator's reaction to the above-mentioned levels may cause subscribe to our channel and follow changes in market sentiment with us. Any comments, questions, and offers are welcomed. We wish you profitable trading and see you soon.